Does your company bill your clients for reimbursable job costs and expenses? Well, then you should watch this video if you want to learn how to do that in QuickBooks Online. You see, billable reimbursable job costs and expenses happen when clients or customers agree to pay for things that you need to perform the services that you are giving to your clients. And there are many different ways to record this in QuickBooks Online. That's why you need to watch this complete video. My name is Mark Smolin. I'm the founder and CEO of Worldwide QuickBooks. I personally guarantee you the clearest possible explanation for every topic that you could need to learn in order to be able to record billable and reimbursable job costs and expenses in QuickBooks Online. You see, all you have to do is watch this video a little bit every day and follow along with me, and then when you finish, you will be an expert in the area of billable and reimbursable costs to clients. And I will answer all your questions about this topic and this video in the comment sections below. I always get back to my students right away because I want your learning experience here on YouTube to be easy and fun. So you do have the benefit of a live teacher and the best possible instruction, and it's right here on YouTube, and it's free, free, free. So exactly how do billables work? Well, once you record a check or an expense or a bill from a vendor, you have to click the check mark in the bottom right that says Billable. It appears right next to the customer or project that you're actually billing. And if you click that check mark and save the transaction, then that item will immediately show up on the unbilled charges report. And it will stay on that very special report until it is actually billed to the client. So what does it mean to bill an expense or a check to a client? Well, it means when it's time to get reimbursed for the job expense that you paid, you will take that check and you will place it on the bottom of an invoice right next to the normal service that you bill the client for. And that will increase the balance of the invoice for the item that you paid for. So what happens when you record the invoice? Well, there are several possible results that could happen in your records when you record an invoice that you placed a billable expense upon. So that depends on you and your choice. And you should know that there are several choices for reimbursable job costs and expenses regarding how QuickBooks Online can record it in your records at the minute that you bill the client. You could ask QuickBooks Online to decrease the expense that you paid for because it increased when you paid, so you might want it to decrease when you pass off that cost to your client. It might increase billable income instead of lowering an expense, or it might increase a different account rather than billable income. In fact, you can ask QuickBooks Online to increase a specific income account for each separate reimbursable or billable expense that you have. And don't forget, when you bill the client, you also have the option of marking up the amount that you paid. And that's why you need this video. There are several different things that could happen, so you need to know how to do each one and see the result of each one in your records and reports so that you can make the best decision on how to record your company's billable and reimbursable expenses. So all you have to do in order to see a specific method of recording, if you want to see just one of those options and you don't want to wait for the whole video, you can click the Show More button right below this video. That will open up the description field, and below the kitty in the description field is the table of contents. And the table of contents in the description field here has chapters that you can jump directly to by clicking the time index of the chapter. There are different choices for different companies because so many different types of companies will need this feature. This feature is most commonly used for contractors, construction, and demolition companies. By the nature of the way they operate, they absolutely must be able to use this feature properly. But this feature is also used by attorneys, accountants, and other professional services, even custom manufacturing firms. So each different type of company with each different type of arrangement with their client will decide how to use the billable reimbursable expense feature. And our example company for the demonstration in this video is a construction contractor. And that's because this video is only a part of the big video right here on YouTube, QuickBooks Online for Contractors. This video is specifically chapters 20 to 25 of that course, and you can get the link to that course right there in the description field, right under the table of contents. So if you're a student who was watching the Contractors video, you can come over here when it's time to learn about billable and reimbursable expenses, follow step by step, and then go back to the Contractors course to finish the rest of the material. And that's why the chapters are listed and numbered that way, because it might not make sense if you think of this video as a separate independent video. But don't worry, the methods apply to all companies. And please ask me your question in the comments section below if you want to see the Contractors video or any other QuickBooks related video. I thank you for watching this video, and I know you will learn well. All of the things that you can do when recording billable reimbursable expenses starts right here with the account settings window. It's also called the company settings window if you have the accountant's edition. Now you may well ask, what are the settings? Well, the settings in QuickBooks Online are what we call the defaults, the options, the preferences. In other words, it's the automatic behavior of the software until you specifically tell it differently. And you can open the settings window by clicking in the top right to get the cog wheel, and then that submenu opens up and account settings will be right in the top left. And again, it will be called company settings if you're using the accountant's edition. Now, once you're in the settings window, you have several choices about how you would like QuickBooks Online to record the reimbursable and billable expenses. And we will change the settings before each demonstration of each of the different ways that you can record billable and reimbursable expenses. And the first one that we will choose is having the reimbursable expense decrease the actual expense at the moment that you bill the client. So that will be the first setting that we will change. In the top right, we click the cog wheel and we go over to account settings just like we did before. Now, the category that we're dealing with is the expense category, and we're in the section of bills and expenses. We click here to open it up. Now notice we are tracking expenses, but we're not billing them yet. But if you click this check mark, we are now able to mark the expense and check as billable. Now we're not marking up yet, but the default choice is to track billable expenses as income. Click to remove the check mark. Some people have the check gone immediately, automatically. In other words, some people's QuickBooks Online account came with this as the default, and some came with this. But in our first example, no check mark next to track billable expenses. Click Save, and then in the bottom right, click Done. Now when we go to the next video and record billable, it will decrease the expense instead of increasing the income. And there's one more step we have to take to prepare ourselves for the billables section. We have to add to our custom reports section the unbilled charges report, so that after we record a charge, it'll be there until we put it on an invoice. So let's add that report now. We click Reports. We go to the Standard section where we pull everything out, and we go to the section of Who Owes You, and one of the reports should be Unbilled Charges. Click on it, and automatically it says the results of all transactions regardless of date. So we do our normal routine. We click Save Customization and click Save. And we can check that it's there by clicking Reports, Custom, and here it is, Unbilled Charges, waiting for us to use in this section. Congratulations, you're all set up, and the videos that follow will be one example of each method of billables.
Chapter 21. Reducing Job Expenses.
Decreasing expenses when billing for reimbursements happens automatically if you set the correct account settings. We will first record the check, expense, or bill, and don't forget to mark it as billable to the specific job or project that the expense relates to. Then we immediately can observe this expense listed on the unbilled charges report. Then when we make the invoice, we add the expense to the invoice, and you will see that after we save the invoice that we added the expense to, it will disappear from the report. Now, when we pay to pay for the expense in the first place, we know that cash and bank will go down by the amount that we pay. And we know, as in a normal situation, whatever expense we paid for goes up. But when we later bill for the expense that we just paid for, accounts receivable will increase by the amount of the billable expense, because we're asking the client to take responsibility and owe us for the expense that we paid. But at the moment we put it on the bill, since the client becomes responsible at that moment, we no longer have that expense, so that expense in our records will decrease. And that's what will happen at the moment we record the invoice. For example, let's imagine on March 16th, we gave Xavier Excavators $3,500 with transfer number 1234 for excavation services that relate to the Hanson Place job. Now we're paying, so cash will go down by $3,500 and the expense will go up by $3,500. So what will be the result in the trial balance? Well, if cash goes down by $3,500, it will become $878,200. And because this is the first time we're paying for an excavation expense will show up in the trial balance for the first time as $3,500. And since excavation expense is not yet in the chart of accounts, we will add it on the fly. This is a first example of adding a list item at the moment we record the transaction. So we click from the top left, we click New, Expense, and the transfer number is number 1234. Now the date is March 16th of 2025. And we're paying Xavier the excavator, but remember, we did not yet put excavation expense in the chart of accounts. Click directly under the word category, click the pull down arrow, and then whenever you're adding on the fly, click add new. Now, this is an expense, and it's a typical other business expense. So it should be easy to find the letter O, and then the name will be excavation expense. And you can pause the video if I'm going too fast, but when you click save and close, you now have it on the list in the chart of accounts, and you can use it for this transaction. Make sure you chose the right bank account you're paying from. Click directly under the word amount. Type in the amount, push the tab key. Now here comes the most important part. Click the pull down arrow, choose the hands in place job, and now the new action that we're learning in this video is to click the check mark to mark it as billable. Now when we click save and close, we can first confirm that it's on the list of unbilled charges. If we click reports and we go to custom reports, we can click our new friend unbilled charges, and you can see we now have this unbilled charge waiting to be put on an invoice. We can also click reports and go to the trial balance and see the numbers are exactly what we predicted. Cash went down just like when we paid any other expense, and excavation expense showed up for the first time right here in the middle as $3,500. You can also look at the profit and loss by customer to make sure that that was placed under the hands in place job. So between the moment that we paid the expense and the moment that we make the client responsible, this $3,500 will be here under hands in place. So now let's continue in the example. Let's imagine on March 30, we billed Bonnie for an additional 10% of the hands in place job, and now we're going to include the excavation expense that we paid. So when we bill for the expense that we paid previously, accounts receivable goes up by the amount, or additionally, let's say, additionally goes up by the amount that we're billing for the reimbursement of the expense, because the client is now responsible, and the expense in our records that lowered our profit will decrease because now the client is responsible for it. So what will be the result in the trial balance at the moment that we make this job invoice and put that billable expense? Well, income from plumbing services will increase by $500,000 because that's the amount of income we earned on the hands in place invoice for each invoice. It will become $1,570,000. And because the client is responsible for that $500,000 plus the $3,500, accounts receivable increases by $503,500 and becomes $1,403,500. That's an increase of $503,500 because it's $500,000 for the normal invoice and $3,500 for the billable expense that gets added to the invoice. And notice, no excavation expense will show on the trial balance. And that's because it goes down to zero because accounts receivable increased by, you can see, $3,500 more as a result of billing them. So that's why excavation expense becomes zero. Let's go ahead and record it. We click New Invoice. Now we know the date is March 25th of 2025 for, March 30th of 2025 in our story as we bill for hands in place. And we click the pull down arrow and choose the hands in place job. Now notice the first thing that comes up is the estimate we've been working on, but in the same right panel, any expenses marked as billable for this job should show up at the same time in the same panel as the estimate. First, we add the estimate the way we normally would. We click Add, and we know for hands in place, QuickBooks Online remembers we bill for 10% of the job. Make sure that's the choice and that's the number. We click Copy to Invoice, and now we can add this second item, the billable expense from March 16th. Just click Add. Now notice it doesn't really put any information. So in future examples, I'm going to have you fill out the description field of the expense or check, because the description field is the only piece of information that will transfer to the invoice. Right now, it just looks like a $3,500 charge. But we click Save and Close, and when we look at the trial balance, we can see the results are exactly as what we expected. Accounts receivable increased to $1,403,500. Income from plumbing service increased to $1,570,000, and there is no excavation expense anywhere in the report because it went down to zero. That's why there's an extra $3,500 up here in accounts receivable. Now, if we click Reports and we go to Profit and Loss by Customer, we can scroll to the hands in place job and we can see there is now zero excavation expense for the hands in place job. And if you double click the zero, you can see the list of transactions that affected the excavation expense. First, we recorded the expense on the 16th. It went up. Then excavation expense went down for this account receivable, this invoice on the 30th. So that's how you can see the breakdown of every expense on the profit and loss by job. There's one more report to look at. Reports. Unbilled charges should be empty, and it is, because we now billed for the item that we marked billable.
Chapter 22. Income from billable costs.
And now we will learn a different method of recording the reimbursable expenses that we have billed. When recording the invoice with the billable expense, the expense amount this time will stay in the expense account. And instead of that disappearing, an income type of account will increase. So we will still mark the expense as billable, and when it's time to get reimbursed, we will still place the check or the expense on the invoice from the right-hand panel the way that we learned in the prior video. But when we pay, that will also be the same. Cash in bank will decrease by the amount that our company pays for the expense when we first lay out the money. And the expense itself will increase because QuickBooks Online thinks it's our expense at the moment that we first pay. But the interesting part happens when we bill the client. Accounts receivable will still increase by the amount of the reimbursable expense. That part is the same because the client is now responsible for it at the moment that we bill. But the big difference is income from billable expenses will go up. So recording the invoice will only increase this new income account that comes with QuickBooks Online, income from billable expenses, and it will increase at the moment that we bill, and it will increase for the amount that we are billing. So income from billable expenses is a default income account that comes with QuickBooks Online specifically for reimbursable billable expenses. Now, it comes with QuickBooks Online as the default account, but we can change this account to a different income account if we want to. And when we do our second example, we're going to choose a different income account, and I'll show you how to do that. But before we can even do the first example, we have to change the settings in the account settings window to be able to include billable expenses as income instead of doing it the way we learned before and erasing the expense. From the top right, we click the cog wheel, we go over to account and settings, and now we go down to the expense category from the left panel. Click expense. Now we're back here with bills and expenses, and this was the place that we set the settings twice. Click on it, and now this time we're going to click track billable expenses as income. Now we click save, and now in the bottom right, just click done. Believe me, the button's there. And now we're ready to record our first example. Let's imagine on April 13th of 2025, we paid Annabelle the architect $17,000 for engineering services related to the Hanson Place job, and we paid with transfer number 1122334. So what will happen in the trial balance at the moment we record this typical but new expense? Well, architect and engineering expense will show up for the first time as $17,000, and because we just paid $17,000 from cash, cash in bank will decrease by the $17,000 and become $861,200. So let's quickly go ahead and record this new expense. From the top left, we click New, Expense. We make the date April 13th of 2025. Now we are paying Annabelle the architect from this bank account with reference number 1122334, and we click directly under the word category, and we find architect and engineering expense right at the top. Click in the amount field, $17,000. Now we mark it as billable, then we click the pull down arrow and we make sure that it's billed to the Hanson Place job. Now from the bottom right, we click Save and Close, just like we've done many times. And when we click Reports, Custom Report, Trial Balance, you see the results are exactly as what we expected. Cash in bank went down to the amount that we predicted, and now we have architect and engineering expense. And we'll take a quick look at two other reports. We will click Reports, and we'll click Custom Unbilled Charges, and you can see right now this Hanson Place billable expense for $17,000 is sitting on the Unbilled Charges report waiting to be billed. And most importantly, let's click Reports and go to Profit and Loss by Customer. Because Profit and Loss by Customer, if you look here for the Hanson Place job, you see that the architect and engineering expense has decreased the job income by $17,000 and brought down the total income so far. Now, of course, the job is not finished, but the interesting part is about to come. Let's imagine on April 30th, we billed Bonnie for another 10% of Hanson Place job and included the engineering expense from Anna. So what will be the result in the trial balance after recording this next job invoice? Well, this is the first time that we're treating a reimbursable expense as income. So billable expense income, which is the default account in QuickBooks Online for income for billable expenses, is going to show up in the trial balance for the first time as $17,000. And because the invoice has $500,000 in income from plumbing services earned, income from plumbing services earned will increase by an even $500,000 because that's the amount of the invoice that's the other income, and it increases to $2,070,000. And because the client is responsible for the regular income that's on the normal invoice that's billed periodically, plus the billable expense income, that means that accounts receivable will increase by the total of the invoice, $500,000 plus $17,000, and accounts receivable will become $1,920,500. From the top left, we click New, Invoice. We choose Bonnie Billabaloney, the Hanson Place job, and we make sure the date is the date that we're supposed to bill according to the contract. We add from the estimate. QuickBooks Online really should remember that we want Hanson Place to be 10%. I don't know what's going on here. Copy to the invoice, and now also add the billable expense. And the billable expense comes on the bottom without any text. But if you type in a description text on the expense or the check, that will flow through to the description field here. So when we click Save and Close, we can check the results in the trial balance reports. Trial balance. The results are exactly as what we expected. You can see that billable expense income has shown up for the first time as $17,000, even though the architect and engineering expense is still there for $17,000. And the income from plumbing services increased to the amount we expected, and accounts receivable increased for the total. Let's also confirm in our custom report area that there is nothing on the unbilled charges report, because now that expense has been billed. But the most interesting report to look at is the profit and loss by customer. When you look at the Hanson Place job, you can see that we had $17,000 in architect and engineering expense, but we also earned $17,000 in billable expense income. So the net effect is the same as using the prior method, but this method discloses a little bit more. Now, our second example will show you more about the available features for billing in QuickBooks Online. You could actually use a different income account from the default income account that QuickBooks Online allowed us to use in the previous example. So instead of using billable expense income, we can use one of the existing income accounts. So let's imagine that our company decided to earn some small additional income by charging more for demolition services than we actually pay our service provider. We would like to see that specific income account listed along with the demolition expense on the profit and loss by job in order to compare the income to the expense. Well, that makes sense, right? So in order to do that, we have to do several steps. We have to first create an account in the chart of accounts called demolition income, and we'll make it a service fee income subtype of account. And don't forget that in this class, before we go to the chart of accounts, we temporarily change to business view, and you'll see why that's very important in the next video. And I promise as soon as we're done putting the new account in the chart of accounts, we'll change it right back to accountant view. But let's go ahead and put that in. So we click the cog wheel and we go down and click switch to business view. Now it has all the important features, and if you remember, when you're in business view, you have to go to the bookkeeping menu choice to find the choice for chart of accounts. Now that we're in the chart of accounts, you click new, and this window is pretty clear. We want an income type of account, and then we want it to be just service fee income, and the name of it will be demolition income. And now all you have to do is click Save and Close, and we've created the account we're going to use. Now we also have to take the demolition income account that we just created and put it in the account settings currently where the billable expenses income is. And that's what tells QuickBooks Online that we don't want to use the billable expense income default account. We instead want to use the account that we created. So it's very simple. In the top right, we click the cog wheel. We go over to Account and Settings. And now we go down to the Advanced category and click on it. And you can see Chart of Accounts has its own little section in the Advanced Settings category. If we click on it, it will give us the chance to click the pull down and choose Demolition Income as the default income account for billable expenses, regardless of which type. Of course, we have to click Save and then click Done, and now we can record our example. Let's imagine on May 15th, we paid Grecon $1,900 to demolish something related to the Hands-in Place job, and we paid with debit card number 9118 or whatever that is. So what will be the result in the trial balance after recording this new expense? Well, we have $1,900 more in demolition expense, so demolition expense increases to $4,900, and we have $1,900 less in cash and bank, so cash and bank decreases to $859,300. Well, that's pretty simple and straightforward, and we've done this so many times before. From the top left, well, actually, don't forget to switch back to Accountant View for the more convenient menus that we will use in this course. So, from the top left, we click New, and we go to Expense. And the date of this expense was May 15th. Again, you can pause the video or slow down the video if I'm going a little too quickly. Now, we're paying Grecon for demolition services, so we click under the category and click the arrow and choose demolition expense, not demolition income, demolition expense. Boy, it was just here. And now the reference number 918273, and of course the amount in this case we have to put $1,900. We check it as billable and associate it with the Hands-in Place job. Now when we click Save and Close, the trial balance looks exactly as what we expected so far. We can zoom in and we can see that cash went down to $859,300, and we can see that demolition expense is now up to $4,900. And now here comes the most interesting part. Now we will bill for the demolition as part of the next job invoice. So let's imagine on May 31, we billed Bonnie for another 10% of the Hands-in Place job. And this time we will include the demolition bill, and this time we're actually going to mark up the demolition bill to an amount more than what we paid. So you will see that we can easily change the money amount once it's placed on an invoice. So what will be the results in the trial balance at the moment we record this invoice that includes the marked up billable expense? Well, the new account, demolition income, will show up in the trial balance for the first time in the amount that we put on the invoice, $3,100. And of course, because the income from plumbing services has $500,000 on that particular invoice, then that number will increase by an even $500,000, and become $2,570,000. And the total income from the plumbing services and the demolition income that are both on the invoice will be billed to the client, so accounts receivable increases by the total amount. And when we finish, accounts receivable will be $2,423,600. And the demolition expense will still be there. So, from the top left, we click New Invoice. Now, we know this is May 30th, and this is the Hanson Place job, and we know to say yes twice. Add from the estimate, copy 10% to the invoice, and add the billable expense. Now, when the billable expense is down here, what you need to do if you want to mark it up is you have to click on the money amount and overtype it with the amount that you're charging the client. Then push the Tab key from the left of your keyboard to save the field, and this is the amount that goes in as income. Save and close, and when we click Reports, Trial Balance, you can see the result is exactly as what we expected. We have $3,100 in demolition income, and the demolition expense stayed the same. The income from the plumbing services increased by an even $500,000, and accounts receivable increased to the number that we expected. But we can also click Reports, Profit and Loss by Customer, and in the Hanson Place job, we still have the $1,900 in demolition expense, but we earned more in demolition income, $3,100.
Chapter 23, Multiple Income Accounts.
Since each billable expense can be tracked separately to a separate expense account, it is now possible in QuickBooks Online to track the income from each separate billable expense to a separate income account. And this will help you clearly see the difference between what you paid as a billable expense and what you charged your client for billable income. Your profit and loss job report can easily compare the income from each separate billable expense to the amount you paid for each one to give a clear picture of your operation. So, if we set up for multiple income accounts, there are 3 simple steps. First, you must activate multiple income accounts in the account settings window. And we have been to the account settings window many times in this course. You must then add an income account for each billable expense that you record earning income for. Then, as a final step, you must edit each billable expense account, and when doing so, you have to connect the corresponding income account to the expense account, because this tells QuickBooks Online which income account should increase at the moment you bill for that specific expense. So, here are our first examples. We know that we already mark up demolition service, and we saw a profit from between demolition income and demolition expense, and we saw that in our last video when that was the only income account for billable income. Now we want to have another one. We want to have income from job supplies compared to job supplies expense in the same way. So now let's do step number 1. Let's create an account called Income from Job Supply Sales, and we'll do that in the chart of accounts. But before we go there, we'll quickly change to Business View, and you will see very soon why we need to change to Business View when managing the multiple income account option. So we'll call it Income from Job Supply Sales, and the detail type will be Other Primary Income. So in the top right, we click the cog wheel, and we go down and click Switch to Business View. And once you're in Business View, you need to click on the Bookkeeping tab in the left panel to get the Chart of Account option, and then you can click Chart of Accounts. Now, when we add an account to the Chart of Accounts, we click in the top right, New. And we've done this before. We click the pull-down arrow for account type, and we scroll to Income. And the detail type will make simple as Other Primary Income. Again, it's very rare that the detail type affects anything as you record your transactions, but it's nice to have. Now the name is going to be Income from Job Supply Sales. And you can pause the video if I'm typing a little too quickly, but once you put this information in, we click Save and Close. And now we've done step 1. Step 2 would be to activate the multiple income accounts feature in the account settings window. Well, that's very simple. So we again click the cog wheel and go over to Account and Settings the way we did several times in this course. And of course, again, it's the category of expense in the Bills and Expense section that we've been to twice. Click to open it up, and now we're going to move single account to multiple income accounts. And then click Save for the little section, and then in the bottom right here, click Done to save the settings in the Account Settings window. Now, the third and final step to set these things up is to connect the income account that we just made with the expense account that will be billed and put on an invoice, so that QuickBooks knows which one goes up when the other is billed. So we want to connect the income and expense accounts. We want to connect job supplies expense to income from job supply sales. And because we changed the option, we have to do this additionally with demolition expense being connected to income from demolition services. They weren't directly connected in the previous video because the previous video only had one default income account. But now they're directly connected, or we will have to directly connect them by doing the same thing that we're going to do with the job supplies expense account when we connect it to income from job supplies. You do this in the chart of accounts, but it must be in Business View for you to see the option to connect these two accounts. You see, when you're looking at editing an account in Business View, now that we click the option to create that we just did in the account settings, we will now see in each expense account, when we edit, this pull-down option to choose an income account to use for billable expenses. And when we click the pull-down arrow, we'll be able to choose the income account that goes with that expense. So you see what happens when we pay the expense, and then you'll see it will go up as income when we bill for it. And we must do this for demolition expense as well, because once you flip the option to multiple income accounts, whatever we did before about the default billable account doesn't matter. So we change the settings, so we have to connect both. So let's go ahead and we won't go back to Accountant's View until we connect them. So we have to go down to the job supplies expense that we created, and you can filter it by typing JOB here, or if you need to pause for a moment and find it. But once you find it, you go in the same row on the right, you click the pull down and choose Edit. And now, when we're in job supplies expense, we're going to click this option, Use for Billable Expenses, and we click the pull down arrow and again type in JOB to get income from job supply sales, the one we just created. And we click Save and Close. We should do the same thing for demolition expense. DEMO. See, we have demolition expense and income, but it's in the expense account that we have to click the pull down and click edit. And then in the expense account, we click the option to connect to an income account, click the pull down, and demolition income is right there. Save and close. And congratulations, we're all set up for our first example. But before we go to the example, let's quickly switch back to accountant's view so that we can see everything else normally. But you'll notice if you open the chart of accounts in accountant's view and you try to edit any expense, you will not see that option. Edit. See, there's no option for multiple income accounts. So that gets you accustomed to the different views and what they do. And now let's record 2 example expenses that we will bill to the Hanson Place job later after recording them. And we'll check the profit and loss by job after each one. So we will first record June 4th, paid staple $5,000 with check number 5 for job supplies related to the Hanson Place job. So we click New, check, just like we've done many times before. Notice we're up to check number 5, or we should be, and we're paying staples just like we recorded prior expenses, and the date was June 4th of 2025. And this time the amount of job supplies expense is $5,000. And of course it's billable to the Hanson Place job. We save and close. Now we open our favorite report in this job, on this class. You know what? We could even use the projects menu at this point. Let's click projects. Okay, and we'll get all of them. And we'll go to the Hanson Place job. Just double click and you get everything related to that project. Click Project Reports, Project Profitability. This way we can see only the Hanson Place job here. We can look at the expense section and see we now have $5,000 more in job supplies expense that generally lowers the operating income for the Hanson Place job under Bonnie. And that brings us to our second transaction. Let's imagine on June 16th, we paid Grecon $10,000 with check number 6 for a demolition job related to the Hanson Place job. Well, again, we've done that before, and it shouldn't be hard to predict that this goes up to $11,900. So we click New, and we go down to Check, and we're up to check number 6, and the payee is Grecon, and the date is June 16th, and demolition services, and in this case the amount was $10,000. And of course it's billable to the Hanson Place job, the way we've been doing all along. Now, when we click Save and Close, you can see demolition expense has increased to the amount we expected. $10,000 for what we just recorded, added to the $1,900 that was here a moment ago. Now, the most interesting part happens right now. Let's imagine it's June 30th and we're going to bill Bonnie for another 10% of the Hanson Place job and include the 2 billable expenses that we just created. And let's imagine we're charging $11,500 for the job supplies and charging her $25,000 for the demolition. So we're going to mark it up after putting it on an invoice. And we already know we're going to see demolition income increase by $25,000. And we already know that we're going to see the job supplies income from sales appear for the first time up here, and the expenses down here will stay the same. So we click New, Invoice, and zoom out a little. And the date we're billing is June 30th. And of course, good old Hansen Place. Now, we add the estimate like we did before. And QuickBooks Online really should remember that we like 10% at a time with Hansen Place, but we'll click Copy to Invoice. And now we have both of these billable expenses. So we click Add for this one and Add for that one. And when we go down, we know that the instructions were $11,500 for job supplies. So these job supplies here, we change to $11,500. And then this one, we mark up as $25,000. Now you may notice that there's no explanation of what they are once they're placed on the invoice. We're going to do a little lesson about the description field and how it affects billables, and we'll talk about that in the next video. But for now, we remember that 5,000 becomes 11,500 and 10 becomes 25. And when we click the pull down arrow for save and close, we can go back to the profit and loss by job for this particular project, and you can see income from job supply sales shows up for the first time in the amount that we put on the invoice, and demolition income is 25,000 higher than it was a moment ago. So you can clearly compare the 28,100 to the 11,900 to decide if you want to keep charging and marking up your clients. And you can compare the 11,500 in supply income to what you paid down here to decide if it's worth it for you to keep charging your client for job supplies.
Chapter 24, Special Billing Issues.
Can you look at this expense and tell us which invoice it has been placed on? I don't think so. Not by looking at it. You might remember, but the way it looks here, there's no way to know. Same thing with this invoice. Can you tell which expense has been placed on this invoice just by looking at it? Probably not if you don't remember all of your bills and invoices. So how do you do that? How do you find one from the other? And the answer is to use the description field. When you record any check, expense, or bill, you have to make extensive use of the description field, because the description field is the only field of information that actually flows through from the expense to the final invoice that you place the expense on. So whatever you had put in the description field in the expense will show up in the invoice's description field on the same line as that very expense. So how do we find a bill if we're looking at an invoice, and how do we find the corresponding invoice if we're looking on a bill? The advice is to put something in the description field of the expense or check that is somewhat unique, that identifies what the expense was for. You could have your own indexing system, so if it happens a lot, you can put the description in something like a pattern that your company knows about, so it would be clear to you when you look at a particular bill what invoice it was on, or you look at an invoice and you know what bill that charge came from. For example, let's reopen the June demolition charge to Grecon, and let's put in the description field this text, June demolition for Hansen. And so let's go ahead and do that now. And there are many ways to reopen any of the expenses that you recorded. You could open it from the reports that we've been using, but I think those who are comfortable with QuickBooks Online know if you go to expenses in the left panel menu, and then you just click expenses, you'll get a list of all the expenses in the order in which they were put in, or actually it's in date order, it's in whatever order you click the column heading of, and they're only expense type of transactions. So it's another way of navigating and finding, and there are many ways. But this was the most recent expense that we recorded, and we went and we put it on an invoice. Let's double click and open it up. Now, we're going to put in the description field, June demolition for Hanson. And of course, if you're following along, you can pause the video and type it in more slowly. But I'm going to assume you're finished, and I'm going to click Save and Close. The invoice has already been recorded, so it's not going to change. And it will not show immediately just if you open the expense and put the description in. So what would you do? Well, obviously, if you deleted the invoice and re-entered it and added the expense, then the description would carry over. But that seems like kind of a far way to go. A faster way would be to simply unlink it from the invoice and add the description and then put it back. So then the question is, how do we unlink an expense from an invoice that's been billed? Well, it's very simple. When you look at the right-hand side of the row that the expense is on, when it's on the invoice, there's a garbage can there. And you can click to remove that line and that billable charge from the invoice. Then save the invoice, and then of course when you re-add it, it should have all the information that you need. So let's give it a try. Okay, let's reopen the invoice. And again, there are so many ways of finding your invoices that I want to introduce you to another one. In the left panel, Sales, Invoices. And you'll eventually get comfortable with all the different ways to open up past transactions. Now we remember, if this is the June charge for the demolition expense, then it was placed on the June invoice and marked up from $10,000 to $25,000. Let's double click. Well, when you double click an invoice, before it opens up, it's going to remind you of the phases that the invoice is in before you can click Edit Invoice. Okay? Now notice it's not there. The text is not there because we changed it on the bill, but we didn't change the invoice at all. So look, we go to the right-hand side here. You see this garbage can on the right? Click it. It says, would you also like to unlink the billable expense? Yes, unlink it. Notice, as soon as you unlink it, the right panel opens up, and you can add it back anytime you want. And if you click Add, not only does it come back, but it comes back with the description text that you need. That's how you're able to look at this invoice and know which particular bill or check or expense this came from. Now, don't forget to do what we did before. We marked it up to $25,000, so we want to keep the numbers the same. We just want to add the description text. So we click Save and Close, and yes. Now it's a breeze to find one using the other. So if you're using the description field properly, then our good friend the search tool will immediately show you both the expense and the invoice listed together. And that'll make it very easy to find which one goes on which. If you click in the top right corner and get the magnifying glass, you get the search tool. And all you have to do is just type in most or some of the text in the description field, and you will see everything that has that text. And if you put it properly in the description field, you'll be able to see here's the billable expense charge because you put that text in the expense. And here's the invoice because that text came over to the invoice. And the search tool will help you see that these are the two transactions that are associated with each other. Now, there's one more closing point about billable expenses in the way that we've done it in this course that you have to be aware of before we move to the next section. If your company uses progress invoicing, you should not use billable expenses in the way that we have been showing here in the course. Billable expenses cannot be put on an estimate, not the way that we're doing it here. And the problem with that is that if you add them to invoices, they will not be part of the percent complete, and the amount billed that shows on the estimate report will not be accurate. So let me show you what I mean. If we click Reports and we go to Custom and we go to the Estimate versus Invoice Report, you can see Hansen Place is indicated as 60% complete, and it says invoiced amount $3 million. But we know that we have invoiced for more than $3 million because of the billable expenses. So to get a more accurate picture of what's going on, we click Projects, and then we'll double click the Hansen Place project. And if you look at the income column here, you can see they break it down more clearly. Here's the income from the main income that was supposed to earn, income from from plumbing services. But we also earned billable expense income in earlier videos and demolition income in recent videos, and these were all billable expenses that were not included in the original estimate because you cannot include them in the original estimate. So these will be the differences if you do it this way. The solution to this problem is to use expense items instead. Expense items can make the same income and same expense accounts change in the same way, but the good news is you can put them on the estimate at the beginning. So when you bill for them, the percent complete and the amount billed will be accurate and reflect the contract. And the amount billed will always be accurate. So the expense items are coming very soon in the next couple of chapters. And that would be an alternative way for you to bill for expenses if you are using progress invoicing. If you're not using progress invoicing, you can do things exactly the way we've shown here.
Chapter 26, Expense Items.
Expense items are items that vendors provide for us, and they get placed on a check, expense, or bill from a vendor. The item is attached to an expense type of account, the same way that income items that we used earlier in the course are attached to an income account. So we know that this was the list of products and services, and we set it up by putting in the data for each individual item. And we know when we put in the data for each item, we had to connect the item to a specific income type of account in the chart of accounts. So we do just what we learned before, and we will use expense accounts instead of income accounts. But then the question is, why would we need them? Well, we use expense items because we can place them on an estimate as part of the contract detail in the work to be done section of the contract. Then we can mark them as billable when we pay the related expense and then bill the client, and the billable item will be part of the normal invoices for progress invoicing. And this time we won't mess up the percent complete the way we did earlier when we were billing only for expenses that affected the account in the chart of accounts without showing the quantity or without showing an item. So this way is better. Now, we will add the quantity information about billable items that could not normally be included if you just billed for expenses the way we did before. For example, let's imagine we have an expense account in the chart of accounts called Indoor Job Materials. Now, if we simply put the expense on the bill or check, we won't have quantity information, and the client won't know exactly what they're being billed for. But if we connect the account in the list of products and services to items that have names like window panes, brackets, and sheetrock, we can then put quantity information so the client has more detail about what they're being billed for and the quantity of the items themselves. So to be clear, the indoor job materials is the expense account in the chart of accounts. And that will increase exactly the way it did when we learned about billables earlier in the course. These are the items that we put in the list of products and services that we connect. And the result will be the same as it was before when we purchased and then billed the client. The only difference is the details are better and the percent complete more matches the contract. So, in order to do this, you have to know that each expense item has two sides. Sometimes we even call them two-sided items. It has an expense side where we connect the item to an expense type of account the way we just discussed. And we could also input what we expect to be the purchase price or purchase cost when we pay the vendor for this item. So the item also has to have an income side that we connect to an income type of account, just like we did earlier in the course. And in that side, we put the price that we're charging or billing for to the client. Now, of course, the purchase cost and sales price could change every time we put the item on a document, but at least it gives you the option of putting that in. So let's add two accounts in the chart of accounts for this example. Let's add an expense account called Indoor Job Materials, and let's call it Indoor Job Materials Expense, and the detail type would be Other Business Expenses. And we'll also add another income account, which will be Other Primary Income, and that'll be the same name, except it'll be Indoor Job Materials Income. And these two accounts will be the accounts that we connect to the items that we just spoke about. So, like we did many times before, we click the cogwheel, switch to Business View, so the chart of accounts is easier for contractors. And in Business View, we can click Bookkeeping to get the choice for the chart of accounts. Now, to put in a new account, we go to the top right and click New. And this one obviously will be expense type of account, but our instructions specifically say it's Other Business Expenses for the detail type. Other Business Expenses. And the name will be Indoor Job Materials Expense. So, and you can pause the video if I'm typing too quickly, but instead of Save and Close, click the pull down arrow and click Save and New. Well, it didn't work, so we can click New in the top right. And the other one will be Indoor Job Materials Income, and the detail type will be Other Primary Income. So it's obviously Income, Other Primary Income, and the name. And you can call it Indoor Job Materials Income or Income from Indoor Job Materials if you feel it makes it more clear. And once you're done, now we can click Save and Close, and now we have the accounts that we're going to use. Now we're going to put on the items in the items list, and we'll add two of them. Let's add sheetrock, $3 each for purchase and $5 each for sale, and brackets, $4 each for purchase and $10 each for sale, and we're going to connect them to both of these accounts. So we want to put these items in this detail with this purchase cost and sales price. And again, we could always change it at the moment we make a transaction, but it's nice. However, before we're physically able to put on two-sided items, that we can bill for as reimbursable and still be part of the contract, that item type is not currently available in our QuickBooks Online account. In order to make that available, we must activate the inventory feature from our account settings window. Then we will be able to put on non-inventory parts. From the top right, well, actually we should click the cogwheel just to switch back to accountant view so it looks the same. And now again from the top right, we click the cogwheel and we click account and settings. In the area of sales from the left panel, we can click sales form. We go down actually to where it says products and services. So we're in the sales category from the left-hand menu. In the section of products and services, click anywhere here to open it up. And this line is what we have to activate right here. Track inventory quantity on hand. Click on it and it's, preparing us for what we expect. Now remember, this course will not go deeply into using the inventory module. We will limit our inventory experience to non-inventory parts. And you have to take a separate inventory course later because there's a lot to learn about it if you're a contractor who wants to track your inventory at a deeper level. Now, click yes, and it's activated. Click Save to save the little section and click OK. Then in the bottom right, click Done. Now, if you want to select products and services, you can click the cogwheel, go to Lists, Products and Services, which I'm already here. And what you can do is click New. And when you click New, now you see you have this additional choice available, this additional item type called non-inventory parts that we can now use to bill and make things right. Before, only these were available, but now non-inventory is available. Go ahead and click on it. And we're going to put in the items that we said a moment ago. Sheetrock, $3 each for purchase and $5 each for sale. So watch how we do it. Of course, we type in the name the way we learned earlier. And of course, we're going to have to put in the sales price rate, which is from the instructions, $5 each. And we connect it to the income account, indoor, IND. Remember, you type it in and it filters it. Indoor job materials income, because it's asking for the rate and the income account. But to get the expense side, you have to click this box. I purchased this product or service from a vendor. And when you scroll lower, you have the ability to put the purchase cost, $3 each, and the expense account, again, filter it, IND, for indoor job materials expense. So our first item is sheetrock. That's connected to indoor job materials income, indoor job materials expense, and the purchase cost is here. The sales price is here. Save and new. Actually, if you click save and close, you can see it was added to the list. It says sheetrock right here, and you can see it's a non-inventory part. Now, again, scroll all the way up and click new. And now we will put our other one, okay, brackets, $4 each and $10 for sale. So it's non-inventory. And of course, what's the sales price? $10 for sale. And we connect it to the same income account, IND, for indoor job materials income. We click the box to put in the expense side. We connect it to IND, indoor job materials expense, and we purchase it at a cost of $4 each. So we put in the cost and the price and the expense account and the income account, save and close. And now we have our billable items on our list. we have the sheetrock, and then we have the brackets. Oh, excuse me, here. We have the brackets, and we have the sheetrock, and you can see they are the only non-inventory parts. So now let's do some example transactions and see what happens. Let's imagine on March 20, we purchased 7 units of sheetrock for $3 each and 5 brackets for $4 each. And basically, these are the purchase costs that we remember, and we purchased them from the vendor at Home Depot. And they're billable to Sarah, the client, specifically for the Southwoods Road job. So this is an expense. We go to the top left and click New, Expense. March 20 of 2025 is the date in our little story. Very good. And we purchased it from our good friends at Home Depot. You could just type in HO, and here they are. Very good. The money's coming from cash and bank. Now watch. We used to have only this section in the expense window. But now that we activated inventory, we can scroll down further and we can see the item section under the category section. So here's what we used to bill for expenses. Now here's what we're using to bill for items. Click under Products and Services and choose sheetrock, quantity 7. And of course, it's billable to the Southwoods Road job. And of course, we're also going to choose brackets, quantity 5, push tab, and QuickBooks remembers the purchase cost that we set up, multiplies it across. This is also billable to Sarah, simple client at Southwoods Road. Now that it looks the way we need it to look, of course, there'd be other things like reference number. But anyway, when we click Save and Close, we can now check the profit and loss by job and see what it looks like right at the point that we paid for the billable expenses. So we click Projects, and we go to the Southwoods Road job, and we go to Project Reports, Profitability. Okay, now check it out. We have this indoor job materials expense for the total amount, and this expense will stay here when we bill the client, and you'll simply see the income from the indoor job materials up here with the other normal income. So let's imagine on March 30th, we billed Sarah for the indoor job materials as part of the normal invoice that we would normally bill on March 30th. We charged her $5 per sheetrock and $10 per bracket. So let's go ahead and do that and see what happens. From the top left, we click New, Invoice. Okay, don't click anything else. Just choose the Southwoods Road job, and notice it remembers the estimates and the billable expenses. Let's put the correct date, March 30th of 2025. Remember, we always add the estimate first, and for the Southwoods Road job, we're finishing 25% at a time. Of course, we didn't make a change order, but anyway, we'll copy. Normally we would. And now we can add these two. We add this one and add that one. Now, after we add them, notice the name of the item is here and the quantity is here. And that's much, much more detail than what came up when we billed before for expenses rather than items. But despite the additional details, you might notice over here the rate. This rate that it put was not the rate we put for the sales price. It was the rate that we purchased the items at. So sometimes you might have to put in the markup rate yourself, even if you put it into the list of products and services when you set it up, because they know the markup can change all the time. Sheetrock 5, bracket 10. Sheetrock 5, bracket 10. And of course, it makes it $85 that you're charging for the items that you paid $41. But it's so nice that you can identify the item rather than the way it was done before in the previous billable section. Save and close and click yes. And when we go back to the projects for Southwoods Road, for the project reports and click profitability, you see both. You see we have indoor job materials income, $85, matched with indoor job materials expense, $41. Thank you so much for watching this video all the way till the end. I deeply appreciate all my loyal students and loyal fans. And remember, you can always get to the main channel page by clicking on the kitty that shows directly under any of the videos that are running. And of course, you can ask me questions in the comment section of any video you're watching. I'm really glad this video helped you, and please stay in touch.